Modern engineering projects define our world, but they also carry monumental risk.
We are in a mega loss era. The average major loss on an engineering project is now 8 times larger than just 15 years ago.
How can a single insurance company possibly cover $1 billion liability? The truth is, they cannot do it alone. This is where reinsurance enters, a hidden financial layer that protects the insurers themselves from catastrophic events. We'll show how this system works, why it's the key to getting mega projects financed, and how it's adapting to future threats. So what is the first, most vital role of reinsurance? It is all about capacity, the ability to say yes to massive projects. Reinsurance dramatically increases an insurer's underwriting capacity. They can take on larger, more complex risks. It also stabilizes their financial results, smoothing out huge profit and loss swings during periods with many claims. This lets insurers offer the massive coverage limits that modern projects demand. Without it, most large-scale construction would be uninsurable. The underlying principle is global diversification. A reinsurer absorbs a local loss by balancing it against premiums from unaffected projects worldwide.
So reinsurance provides financial muscle. But how is that muscle applied? It is not one size fits all. There are 2 primary methods.
First, there's treaty reinsurance. This is an automatic long-term agreement covering an insurer's entire portfolio of similar risks. But what about a one-of-a-kind project? A new type of power plant or a massive tech facility? This requires a custom solution. Facultative reinsurance. Facultative means the reinsurer has the option to accept or reject each specific risk, underwriting it on a case-by-case basis for unique challenges. With the boom in energy and tech projects like data centers, securing enough coverage from standard treaties is harder. So facultative use is rising. Reinsurers do not just provide money, they provide intelligence. They offer deep technical, actuarial, and claims support to the primary insurers. We've seen the financial foundation and the different tools. But how does this system actually enable a specific project to get built? The most significant and often overlooked role of reinsurance is its effect on financing. How does it make a project bankable? Banks financing a multi-billion-dollar project are exposed to immense risk, especially during the construction phase, before revenue is generated.
A strong insurance policy backed by highly rated reinsurers acts as a form of security. It assures lenders that their capital is protected.
By de-risking the project for lenders, reinsurance directly facilitates financing. It turns a high-risk venture into a viable, bankable investment. Beyond physical construction, what about the liability of the engineers themselves? This covers risks that do not even involve physical damage. But the risk environment is not static. It's becoming more difficult. New challenges are forcing the reinsurance industry to adapt. Climate change is increasing the frequency and severity of natural disasters, posing an escalating threat to massive infrastructure projects.
This also creates novel liability claims. Engineers could be sued for negligence if designs fail to account for future extreme weather.
Simultaneously, a boom in complex construction for energy and tech is pushing the limits of traditional insurance capacity. The system is under pressure. With risks growing, how can project leaders get ahead? The answer lies in shifting reinsurance from a reactive safety net to a proactive partner. Recall the mega loss era? The most effective way to manage those risks is not after construction begins, but before a blueprint is finalized. Engaging with insurers and their reinsurers during the earliest design stages, the FEED stage, is a powerful move to optimize a project's insurability. This connects everything. The reinsurer's knowledge informs the project design. A better, more insurable design makes the project more bankable. Some see reinsurance as a mysterious financial trick. In reality, it is a highly regulated risk transfer mechanism fundamental to the global economy. We've seen that reinsurance is far more than a simple backstop. It expands capacity, ensures stability, and makes modern engineering financially possible. It is the significant, often invisible mechanism that safeguards our most ambitious construction and infrastructure projects from a world of increasing liability. As projects become more complex and risks like climate change intensify, its role will only become more critical for progress.
For project leaders, the message is clear. Engage risk partners early. Apply their deep expertise to build a stronger, safer, and more successful future.